Let's start off with that, actually. The decision by the State Bank of Vietnam to cut rates. Obviously, this might be a boost, actually, for banks that are looking to at least release more capital into the markets. But again, it's happening against a rather uncertain economic backdrop in Vietnam. Can you share with us what you're seeing on the ground in the major cities in Vietnam with regards to how the economy is faring and how it's impacting the outlook for banks such as yours?
Thanks for having me on the show. Yes, I think you're captured it very well. I think ultimately there are quite some headwinds globally. And again, I think that has affected GDP growth and only coming in at 3.3%. However, I think the most recent rate cuts actually have really started shifting a little bit the sentiment. And I think we're seeing actually real estate coming back and quite a bit. So in May, and probably we have disbursed 70 to 80% more mortgages than and what we have done in the periods beforehand. So I think there's really interest coming back. And I think if you look at domestic consumption, it's actually for the first 5 months, it's up 12.6%, roughly like that. There's still trade surplus, and we only have disbursed up to now maybe 20% of the state budget. So there's still 80% of public disbursement. So I think even if 3.3% were coming in and lower than expected, I think there's actually still some room going forward and some additional potential to get this to a higher level.
Has the demand for loans in Vietnam been impacted with this quasi-economic slowdown, the slight slowdown we've seen in GDP? And how is Techcombank positioning itself if indeed there are some challenges towards growing loans in this fast-growing country that seems to have hit a bit of a speed bump in recent times?
So I think that is actually true. So if you look into growth since the beginning of the year, and we only seen 3% in credit growth. And if you ask ourselves, we actually grew the book by roughly 8 to 9%. So we clearly gained market share. That's a little bit like, and who are we lending towards to? So I think the segments and we are in, and we mostly bank some of the largest conglomerates and which have a very diversified income stream, cash flow stream. We are still having a lot of investment opportunities, so I think they are still looking for credit, and we're also very comfortable in extending credit. And I think in some of the other segments, especially some of the SMEs, I think they still find it difficult, and also their order books are probably not as full as it used to be. So therefore, again, probably also banks are a little bit reluctant. And I think there's a little bit of an unfortunate combination of relatively high interest rates, not a lot of business really to go after, especially in the manufacturing industry, export industry. Also, tourism is not completely back. But again, the parts of the industries we are operating in, and we're actually quite okay. And as I said, we're actually gaining market share.